Good morning, Tom.
Yeah, hey, how you doing?
All right, thank you. Thanks very much for doing this again. As per usual, if I could ask you just to sort of introduce the fund a bit first, and then we'll sort of work through what's going on and do some questions.
Yeah, of course, no problem at all. So look, once again, thanks very much for having me on. Thanks everybody for listening. I hope I won't turn you off too much. What is DORE? What does Downing Renewables and Infrastructure Trust do? We invest in renewable energy and other infrastructure across Europe. And that's what this little slide here says. So what this tries to do is just to articulate a little bit about what the portfolio looks like, and also tries to describe a little bit about what our strategy is. So if I start with the strategy first, the strategy is to try and invest in different types of renewable energy. Different types of renewable energy have a reliance on different natural resources. So for example, the UK solar portfolio here it is reliant on sunshine in the UK. And might seem pretty obvious, but Swedish wind farm and the Swedish hydropower portfolio that we have over on the other side of the pond there, they rely on both wind and rainfall. Now, that reliance on different seasonality, different natural resources creates a kind of blend of exposures, if you want to think about it that way. Different natural resources have different production profiles. They produce at different times of the day, and what that means, and different times of the year. And what that means is that you get revenues that are not necessarily correlated to one another. And if you build up a portfolio of revenues that are not correlated to one another, then you increase your quality of earnings, you increase the stability of your returns to your shareholders. And that is the plan. So we like not only different technologies, which I've just talked about, but we also like different jurisdictions. And different jurisdictions allow us to access different policy regimes. That was very important during COVID, where we had different policy responses from different governments. And fortunately, as we had a spread of investments, we weren't really affected by those in any one of the jurisdictions, but perhaps had we been all concentrated in one location, we would have been. It also allows us to access different energy markets, and those different energy markets have different prices and different prospects. So just rounding off on the portfolio here, then you can see we have the generation assets I talked about. You can also see we've got something called a shunt reactor. Excitingly named. It's a pretty prosaic bit of kit. What it does is it helps the transmission system in the UK transport electricity very efficiently. Fantastic asset, and a really good return for what's a very limited risk involved in the operations of that asset. It's actually got a long-term contract with the national grid, and it gets paid for just being available, which is fantastic. And then we've also got some investments in the Swedish electricity distribution system, where we own about 480 kilometers of wires, and that is the wires that connect people's homes and businesses to generation and to the transmission system. And again, very long-term asset. Again, interesting because it's got revenues that aren't necessarily derived from the sale of power, unlike our generation fleet. So again, think about diversification. That really adds to that theme. So if you look at the next slide, you can see how that shapes up. So we are one of the few investment trusts in our sector that started off with an idea of creating a diversified portfolio by technology and geography from the beginning, and that really shows through in all of these different charts we've got here. You've got this good spread of generation by technology, you've got a good spread of exposure by power markets, and we are a nice spread there by by geography as well, and we're looking to continue to increase that exposure to different geographies. And if you look at that next slide, what we keep going, Jeff. There you go. What you can see is kind of how we think about life, how we think about diversification. So if you think about what I was saying about that different type of generation profile, and therefore different revenues throughout the year, that's that bottom graph there on the left hand side. And what you can see is the orange, which is solar, has a completely different profile to everything else. And that's months of the year on the bottom, that's percentage of annual generation on the left hand side there. And what you're trying to do is you're trying to get that sort of solid black line there to be as flat as possible, and that's a balanced portfolio. When you look at the top there, the other benefit of investing in this area, and we have a lot in common with others here, is that you get long-term fixed revenues. This looks at the next 10 years or so, and what you can see there is pretty consistently you've got that sort of 40-45% of revenues are fixed and inflation linked. Some of them are from energy generation, some of them are from the grid assets which don't generate electricity, and then you've also got a little slope there on the lighter color there, which means that actually in 2023 and 2024 we're about 70% or so fixed revenues, so we know what we're getting per unit of energy or per unit of availability, and then that tails down to 40%, and that's our sort of near-term hedging program, and we do that on a rolling basis. So conclusions here are that we do know where a great deal of our revenue is coming from for the next 10 years or so. And that probably leads us to sort of how we've been doing. So we've got this strategy of diversification. We've been going since December 2020. How have things gone with the investment trust? Well, we've delivered about a 30% total return and that's a NAV total return there since we started. And we have gradually paid and increased our dividends as we've done so. Looking forward, we think that the dividend cover in particular looks healthy. So we have around about a 1.4 times average over the next 3 years. We think that's our estimations of that in the future. And so we think we're very, very well placed to continue to deliver the dividend and continue to deliver that NAV growth. And it's actually that next little bit, that NAV growth, that is what is really exciting us at Downing at the moment. So we talked about this strategy of having different investments in different assets, and what's coming out of that strategy is opportunity. I wanted to spend a little bit of time just explaining just how much of an opportunity we think there is just within the existing portfolio. So now, for these purposes, I'll focus on one part of the portfolio, and that is the hydropower portfolio. So this is a sort of potted history of what we've done. In short, there's a lot of activity. What we've done is we bought 8 hydropower plants to start with. We created a platform, a company that was capable of operating them effectively, was capable of growing, and was capable of operating these small hydropower plants in a way that was different from how they've been operated before. And in short, these hydropower assets are quite old. Typically they're sort of 60 to 80 years old. They've been operated in a sort of very traditional way before we've acquired them. And what we're doing is we are modernizing these plants. We're introducing different systems, different processes. We're bringing them up to the digital age. And what that does is it means we can avail ourselves of opportunities in the market, and that means we can increase the value of these assets. We can increase how much money they make from selling their electricity, and we can increase their effectiveness. So this is all very good, but what does it mean when we think about pounds and pence? And that's what the next slide shows. So at the moment, what we have is we have our hydropower portfolio, and we hold those at an 8% discount rate. So that means that we're projecting that they will produce an 8% return per annum. The hydropower portfolio is roughly about half of the NAV of DORE, so that's about 110 million or so. When we buy hydropower plants, we are now adding them to a portfolio that's of considerable scale. We've grown the portfolio from 8 to 28 hydropower plants. Once you get to that scale, you start to get efficiencies. You start to get efficiencies of costs. So it costs you less to insure each individual plant. It costs you less to operate each individual plant. It costs you less to borrow, to take a mortgage out against those each individual plant, because you've got a bigger portfolio and there's less risk associated with any individual plant. And that 35 to 195 basis points on that first bit there, that is the bit reflecting actual value that we've created in the portfolio to date. So each acquisition that we've made, we've realized between 35 and 195 basis points of value. To give you an idea, if we were to replicate this on the whole portfolio, 100 basis points on the portfolio is worth about 13 million pounds. So we're shooting here for quite a lot of value relative to what we're holding the portfolio at the moment. Now, what you can also do, as I said, with these hydropower plants, which is really unique in the world of renewable energy, is that you can operate them differently. You can slow down production when prices are lower. You can speed up production when prices are higher by holding back and releasing more water in the river systems that we manage. What you can also do is, with some software and some hardware upgrades, you can access the frequency markets. Now, frequency markets are just emerging in Sweden. Sweden's a few years behind the UK, and the other types of assets that will be able to access the frequency markets are batteries. But what we've discovered is that with a bit of elbow grease and a bit of kit that's taken about 6 months to arrive, and a lot of software engineering and new operating systems, we can compete with batteries in the Swedish frequency markets with our existing hydropower portfolios. So that is accessing quite lucrative revenues that were never in our investment case. We think, and we think relatively conservatively, that that's worth between 50 and 100 basis points on the entire portfolio. And then lastly, but certainly not least, the hydropower plants own the land upon which they're situated. And so we actually have 28 hydropower plants in Sweden. So we have 28 quite large plots of land. On those land, there are buildings, there are substations, there are grid connections, there's all sorts. What we've discovered is that we can actually put batteries on our own land, and we can develop those batteries, we can build those batteries, we can connect into grid connections that our hydropower plants are already connected into, and which are typically on our own land, so they're not far away. And that is very valuable to the fund, and there's a few reasons why. So on the next slide, I think what we talked about here, this was just about the frequency markets and the steps. So we were just talking about how This is already underway, so this isn't a theoretical exercise about accessing the frequency markets. I think we now have 3 plants where we've installed the hardware, and we're now going through software testing and registering with the relevant authorities to be able to access and participate in those markets. On the slide after that, then we talk about the batteries, and in particular, on the right-hand side there, it's not a pretty picture, but what that is a substation, and in the background, the red brick building is the powerhouse, is where the hydropower plant is located. So the point of showing you that picture was just to show you how close the grid connections are, and the closer the grid connection is, the cheaper it is to connect to it. It also tries to make a few points here. So to the extent that we are not buying these projects from developers, we don't have to pay a developer fee. To the extent that we are connecting into grid connections that are close to our hydropower plants or on our land, the capital costs of that are cheaper. And of course, typically you pay a landlord 5 to 10% of your revenues each year. If you are the landlord, then you're not paying that to anyone else. So these batteries should be cheaper for us to run. They should be cheaper for us to put in. We should be quite competitive in that market. And as also, we should be faster to build and connect them. And we're really quite excited about that. So that was really talking about that opportunity, both to increase the revenues of the business and also to increase the value of the business. I think that was really pretty much what we had to talk about. This was just really about some updates about what we've been up to over the past 3 to 6 months. You know, we've continued to buy more hydropower plants, continue to increase the opportunity that I've talked about. Excuse me. And we've also bought some solar assets in the UK as well.
Great.
I think, James, that was pretty much it for me.